Hello everybody. In this video, I'm going to be doing a stock analysis of Royal Caribbean, and I just want to let you know up front that this is not a technical analysis video, but more so a general outlook on the company and the stock and if I think it is a strong buy or not. The very first thing I wanted to do is take a quick look at Royal Caribbean's revenue and earnings for the last 4 years. And as you can see, they were able to increase revenue and earnings year over year. And they're actually expected to be able to do so every year until 2023. And they actually had a bit of a weak quarter in quarter one of 2019, but they should be able to at least match earnings of 2018. And they're probably going to be able to increase them, but they're actually very likely to be able to increase them all the way till 2023. And I'll get into why that is in just a second. Next up, I'm going to take a look at a free feature on Yahoo Finance, which is often overlooked, and it's really useful for comparing similar companies. And we're going to take a look here first at Royal Caribbean and then compare it to Carnival. And Royal Caribbean is actually taking a lot of market share away from Carnival, but I'll get more into that in a minute as well. And they are the 94th percentile and an outperformer in sustainability, which is far above all of the other cruise liners companies that I've taken a look at. And they are far above environment, social, and governments in the category average. And then for a quick comparison, we're going to take a look at the market leader, which is Carnival, and they are into the 75th percentile, so still doing pretty well, and they're the biggest cruise liner out there, but their environment is not doing nearly as well. The cruise liners are not nearly as fuel efficient or as new as Royal Caribbean's cruise liners. And then social, not doing nearly as well. Royal Caribbean is currently doing extremely well on social media, especially when compared to Carnival. And then governance, they're actually doing really well, just like Royal Caribbean. And next up, I have a bit of information that's really interesting that I got from Wikipedia, so you can be sure to fact check me if you don't believe it. But the 4 biggest cruise liners in the world are all owned by Royal Caribbean, and there's 2 more in production or under construction that are planned to launch in 2021 and 2023 that are both going to be bigger than the Symphony of the Seas. With all of the hype around these ships launching in 2021 and 2023, it's very likely that Royal Caribbean is going to be extremely financially successful in the coming years, especially with these ships very likely selling out in the very first few months after they launch, if not years. So they're going to definitely see extremely good growth profit in years to come. And if we look at the growth of the stock in the last 5 years, it has doubled. And I don't know if it'll double again in the next 5 years, but I would say definitely in the next 5 or 6, unless we see some kind of huge economic recession. So definitely a huge growth in this stock in the last 5 years. And I definitely see them doing extremely well in the future. And if we take a look at Norwegian, we see 50% growth in the last 5 years, which is pretty strong growth, and I think they will continue to grow as well, just not quite as well. And they don't have many cruise liners under construction like Royal Caribbean does, so not seeing nearly as much growth for this company, and they run their business a lot differently than Royal Caribbean, and I think Royal Caribbean is just a lot better of an investment. And then if we take a look at the industry leader right now, which is Carnival, we see only 24% growth in the last 5 years, so a little bit better of a dividend, but much less strong growth, so definitely not the best investment of these 3. Next up, I wanted to take a look at a couple of points made by an analyst at Morningstar who gave Royal Caribbean a buy rating. And the first one is basically just saying that Royal Caribbean can maintain their perception while getting better and better yields. And then the second point is the one I really wanted to focus on. It says, as baby boomers retire, they are likely to pursue more leisure travel. Investments in new ships should position Royal Caribbean to capture the leisure dollars spent in this demographic cohort. And basically what I take that to mean is that Royal Caribbean is setting themselves up to be industry leaders as they build more ships and advertise to the baby boomers. And baby boomers are really the ones that they're trying to focus on because they're the ones taking 2, 3, 4 cruises a year, and they're definitely appealing to the younger crowds as well, but younger crowds can really only afford to take at most 1 cruise a year. So baby boomers are really spending a bulk of their money on the cruises compared to the younger generations. Next up, I'm going to take a look at 3 different points made by an analyst who gave Royal Caribbean a sell rating. The first one is that weakness in consumer spending spurred by an economic downturn could affect discretionary spending and cause pricing to soften. So basically, if there's an economic recession, Royal Caribbean is going to see a big downturn, and really that can be said about any business. So I really don't think that's a strong argument for a sell rating. Next one is that volatility in input prices, including commodity prices, particularly in energy, labor, and food, could cause profits to contract. And I mean, if costs go up, then revenues are going to go down. That's also true for just about any business. So really not very strong points for a sell rating. And the third point actually does make some sense. International political and economic turmoil could cause cruise cancellations and itinerary changes. So if there is a conflict in Central America or a lot of the other third world countries that Royal Caribbean does visit, then there could be a lot of cancellations and loss of profit for Royal Caribbean. But if a couple of itineraries change, it's really not going to affect the entire business, especially if you're thinking about the long term. I was actually on a cruise just last week, and I wanted to look up a bunch of stocks on different cruises because I understood how profitable they could be, and I was really not impressed until I looked at Royal Caribbean, and I was really impressed by the stock's performance and the overall company. So definitely ask me if you have any questions about Royal Caribbean, as I do have a little bit of familiarity with the business model. And if you have any questions about it at all, or any questions just about stocks in general, please do let me know down below. If you enjoyed this video, I have lots of other brief stock analysis videos on my channel, very similar in the format to this one, and subscribe for more content. Thank you so much for watching.